Hey guys, listen, we all know the financial landscape is changing faster than ever before. What worked yesterday might not work tomorrow, and that's especially true when it comes to your money. We're talking about investing, saving, even how you spend your hard-earned cash. It's all evolving at warp speed. But don't worry, I got you. In this video, we're diving deep into the top 5 personal finance trends that are absolutely dominating 2025. These aren't just some random fads, guys. These are major shifts in the financial landscape that you need to know about if you want to stay ahead of the curve and seriously grow your wealth. We're talking about everything from AI that manages your money to new ways to invest with just a few bucks. So buckle up, smash that like button, and let's get right into it. Alright, let's kick things off with the trend that's blowing my mind. AI-powered personal finance. I'm talking about apps and software that are so sophisticated, so intelligent, that they basically act as your own personal financial advisor, only without the hefty fees. Back in the day, we had budgeting apps that just, tracked your spending. Helpful, but pretty basic. But now, guys, we're talking about AI that goes way beyond that. These AI-powered tools are analyzing your financial behavior on a whole new level. They're looking at your income, your expenses, your spending patterns, even your investment goals, and then using that data to give you personalized recommendations. Imagine this. You're about to buy a coffee, but your AI assistant pops up and says, "Hey Brandon, I know you love your lattes, but you're actually close to exceeding your budget for dining out this month. How about we brew a pot at home today and save that $5? That's the power of AI in finance. It's like having a little voice in your ear, constantly guiding you towards smarter financial decisions. And it gets even more insane. These AI tools can actually predict your future expenses based on your past behavior. Let's say you have a tendency to spend more on travel during the summer months. Your AI can pick up on that and start setting aside money in advance, so you're not caught off guard when those plane tickets and hotel bookings come through. It's like having a crystal ball for your finances, but wait, there's more. AI-powered robo-advisors are also becoming increasingly popular, especially among younger generations. These platforms take the guesswork out of investing. You simply tell them your risk tolerance, your investment goals, and bam! The robo-advisor builds and manages a diversified portfolio for you. We're talking about automatic rebalancing, tax loss harvesting, all the fancy stuff that used to be accessible only to high net worth individuals. The best part? Robo-advisors typically charge much lower fees than traditional financial advisors. This means you get to keep more of your hard-earned returns. And as AI technology continues to evolve, we can expect even more sophisticated features and capabilities from these platforms. So, if you haven't already jumped on the AI-powered personal finance bandwagon, now is the time. This technology has the potential to revolutionize the way we manage our money, making us all smarter, more efficient, and ultimately, wealthier. Alright, let's talk about savings. Specifically, where you're stashing your hard-earned cash. If you're still relying on a traditional savings account from a big bank, you might want to grab a seat, because this next part is important. For years, traditional banks have been getting away with offering pathetic interest rates on savings accounts. I'm talking 0.01%, maybe 0.05% if you were lucky. It's practically an insult, especially with inflation eating away at the value of your money. It's like they're doing us a favor just for holding our money hostage. But here's the good news. Digital banks and fintech companies are here to disrupt the game, and they're coming in hot with something called high-yield savings accounts. These accounts typically offer interest rates that are significantly higher than what you'd find at a traditional brick-and-mortar bank. We're talking about 10 times, even 20 times higher in some cases. It's not just about the money either. Digital banks are often more user-friendly and accessible, with sleek apps and 24/7 customer support. Now you might be thinking, okay, but are these digital banks safe? What about FDIC insurance? Don't worry, most reputable digital banks are FDIC insured, just like their traditional counterparts. This means your deposits are protected up to $250,000, so you can sleep soundly knowing your money is safe and sound. Switching to a high-yield savings account is one of the easiest yet most impactful financial moves you can make today. It's a no-brainer. You're literally leaving free money on the table by sticking with a traditional savings account. So, do yourself a favor, check out some of the top-rated digital banks out there, compare their interest rates and features and make the switch today. It takes just a few minutes and you'll thank me later. Let's talk about investing, specifically how the game is changing in 2025. Have you ever wanted to own a piece of a company like Tesla, Amazon, or Apple but thought, yeah, right, like I have thousands of dollars just lying around to buy a single share? Well, guess what? You don't need thousands of dollars anymore. Fractional investing has exploded in popularity, and it's making investing more accessible than ever before. With fractional investing, you can buy a portion of a share in a company, even if you only have a few bucks to spare. Think about it. Instead of dropping over $1,000 for a single share of Amazon, you could buy a fraction of that share for, say, $50 or even $10. This opens up a world of possibilities, especially for new investors or those with limited capital. But here's the thing. Fractional investing isn't just about making investing more affordable, it's also about building a diversified portfolio. See, back in the day, if you only had a few $100s to invest, your options were pretty limited. You were basically stuck with low-yield savings accounts or maybe a few shares in a single company. But with fractional investing, you can spread your money across a variety of assets. We're talking stocks, ETFs, even real estate, all with just a small amount of money. This diversification is key to minimizing risk and maximizing your potential returns over the long term. And look, I get it. Investing can be intimidating, especially for beginners. But that's the beauty of fractional investing. It allows you to dip your toes into the water, get comfortable with the process, and gradually build your portfolio over time, all without breaking the bank. So, if you've been on the fence about investing, thinking it's only for the wealthy, think again. Fractional investing is leveling the playing field, giving everyone the opportunity to grow their wealth and build a brighter financial future. Alright, let's talk about a trend that's everywhere you look. Buy now, pay later, better known as BNPL. These services like Affirm, Klarna, and Afterpay have exploded in popularity, especially among younger generations. And it's easy to see why. They offer a tempting alternative to traditional credit cards, letting you split purchases into smaller, more manageable payments, often with zero interest. Sounds great, right? And it can be, but there's a catch. While BNPL can be a useful tool for managing cash flow or making those bigger purchases more affordable, it's crucial to understand the potential downsides. Because trust me, there are downsides. First and foremost, BNPL can make it dangerously easy to overspend. When you're not physically swiping a credit card or handing over cash, it's easy to lose track of how much you're actually spending. And those seemingly small payments can add up quickly, leading to a mountain of debt before you even realize it. Another thing to watch out for is those late fees. While many BNPL services advertise zero interest, they often hit you with hefty fees if you miss a payment. These fees can quickly wipe out any perceived savings and send you spiraling into a debt cycle. Plus, using BNPL excessively can actually hurt your credit score. Unlike traditional credit cards, which report your payment history to the credit bureaus, BNPL transactions don't always show up on your credit report. This can make it harder to build credit, especially for young adults who are just starting out. So, what's the bottom line? BNPL services can be a convenient tool when used responsibly and strategically, but it's crucial to treat them like any other form of credit, with caution. Before you hit that buy now, pay later button, ask yourself, do I really need this item right now? Can I afford the payments? Have I read the fine print and understood the terms and conditions? Trust me, taking a few extra seconds to think things through could save you a lot of financial headaches down the road. Alright, let's wrap things up with a trend that's shaking up the way we think about money itself: cryptocurrency payments. Now, I know what you might be thinking. Cryptocurrency? Isn't that just for tech-savvy investors and people who understand blockchain technology? Well, not anymore. In 2025, cryptocurrency is moving beyond speculation and investment and becoming a legitimate payment method. We're seeing major companies and retailers jumping on board, accepting Bitcoin, Ethereum, and even stablecoins for everyday transactions. Think about it. You could be buying your morning coffee with Bitcoin or paying your bills using a stablecoin pegged to the US dollar. This shift towards mainstream adoption is being driven by several factors. First, the technology behind cryptocurrency, particularly blockchain, is becoming more user-friendly and accessible. Second, as more people become familiar with cryptocurrency and its potential, they're more likely to use it for transactions. And let's not forget about the potential benefits of paying with cryptocurrency. For starters, transactions are often faster and cheaper than traditional payment methods, especially for international transfers. Plus, cryptocurrency offers enhanced security and privacy compared to traditional payment systems. Blockchain technology ensures that transactions are secure and transparent, while also protecting your personal information. Now, it's important to note that the cryptocurrency landscape is still evolving, and there are risks to consider. The value of cryptocurrencies can be highly volatile, so it's essential to do your research and invest responsibly. But despite the risks, the trend is clear. Cryptocurrency payments are here to stay, and they have the potential to revolutionize the way we transact in the years to come. So, there you have it, guys, the top 5 personal finance trends that are absolutely dominating 2025. From AI-powered budgeting to cryptocurrency payments, these trends are changing the financial landscape as we know it. But here's the thing, it's not enough to just be aware of these trends. You need to take action and adapt your financial strategies accordingly. Whether it's embracing AI-driven tools, switching to a high-yield savings account, or dipping your toes into the world of fractional investing, the key is to stay informed, stay ahead of the curve, and make smart financial decisions that align with your goals. And hey, I want to hear from you. Which of these trends excites you the most? Are you already using any of these tools or strategies? Drop a comment below and let me know. And as always, if you found this video helpful, smash that like button, subscribe to the channel, and hit the notification bell so you don't miss out on any future personal finance tips and tricks. Thanks for watching, and I'll catch you in the next one.